Capital and revenue receipts. Capital and revenue receipts. Just as you have revenue expenses and capital expenditure, okay, you also have capital receipts and revenue receipts. And the distinction of these two are also important. So receipts which are obtained in the normal course of business activities within short period, they are revenue receipts. What type of those receipts we can see? It may be the sale of goods, or it may be, sale of services. It may be the interest income. It may be dividend income. It may be rental income. Okay, so all these incomes, all these receipts are for a short period. These are all revenue receipts. Revenue receipts. Commission received, it's received in the short period. Okay, so these are the examples for revenue receipts. By contrast, you have the capital receipts, like when you raise the debentures from the market, capital markets, you raise with an intention to keep that money with you, or that is with your company, for a longer period. 10 years debentures, when you're raising, you keep those debentures for 10 years. You take the example of the share capital. Okay, if it is equity share capital, as long as the company exists, the share capital remains with the company. Share capital that is raised from the public. Okay, so this is a capital receipt. This is a capital receipt. Okay, now example you can see there. Okay, you can see secured and unsecured loans. The owner's contribution, what is that? Share capital. Okay, so revenue and capital receipts are recognized on accrual basis. Accrual basis, not on the, received or paid basis. These are receipts. We're talking about receipts. So when we are talking about receipts, it is not based on the day or date received, but it is based on when it is accrued. Accrual basis. What is accrual basis? It is becoming due. Okay, accrual is becoming due. Accrual basis means becoming due, right? So yeah, as soon as it is becoming due, you establish that there is a receipt. There is a receipt, right? There's a revenue receipt. There's a capital receipt. Commission has become due. You're still to receive that commission. So you will recognize saying that it is a revenue receipt. Okay, you will establish that it is receivable. And similarly, you will also see, let's say, the amount on the share capital is to be received, but it has become due. Okay, there's a due date. That due date is achieved. It is due to be received. So once it becomes due, that's called accrued. Once it is accrued, you will establish. Okay, you will establish and record it. That's a capital receipt. Okay, so whether it is revenue or capital receipt, once it becomes accrued, we establish such a receipt and record in the books of accounts. That's what I try to say. So the revenue receipt should not be equated with the actual cash receipts, right? That's a final conclusion. Now, as I told you, the revenue receipts and revenue expenses enter the profit and loss account, while the capital receipts and capital payments enter the balance sheet. The revenue expenses and revenue receipts are recorded in the profit and loss account. We make a record in profit and loss account. But while it is capital receipt and capital expenditure, we record them in the balance sheet. Okay, in light of this, let us have a small exercise with another set of students. Okay, now I'll take the remaining people other than the ones who have already attempted. I'll take Kaushik, Ramu, Tirmalesh, and Pranay, then Shravani, Maheshwar, Ganesh. Okay, I'll take the remaining students other than the first set. I want you to attempt. And now I'll read the transaction I want you to attempt, then we'll cross check whether what you've said is right or wrong. Okay, so Good Pictures Limited constructs a cinema house and incurs the following expenditure during the first year. Okay, during the first year. And the details are as on 31st March 2016. Okay, number one, second-hand furniture worth 9,000 was purchased. Repairing of the furniture costs 1,000. Okay, the furniture was installed by your own workmen. Okay, and wages for this being 200. So I want somebody to take up. Anybody who is interested in the list that I have read just now? Go ahead. Second, there's a second-hand machinery of furniture for 9,000. It is purchased, and there were repairs for that 1,000, and there are wages for 200. How do you deal with these two? This is important, making a distinction between these items are important because you have to prepare the profit and loss account and balance sheet. Okay, Shravani will take up. Go ahead.
So what's the problem, sir?
Now, how do you treat it?
Like capital expenditure or revenue expenditure only?
Yeah.
It's revenue expenditure, sir.
Now, in this, what is capital, what is revenue?
Okay.
Yeah, Ganesh, take up.
Furniture worth is capital expenditure. Furniture bought in.
9,000 is capital expenditure.
Yeah.
Right, wrong, don't worry. We'll check the answers, okay? It is just an exercise. Whether we get six-pack or not, that is, the last thought to get. But we will proceed that you will get a six-pack, right? When you're going for gym, right? So we will proceed with the intention that we will say correctly. But if it goes wrong, if you don't get six-pack, you get only 4 packs. It's okay, right? So go ahead.
Furniture bought in is capital expenditure, sir.
Okay.
Then furniture cost is also it's a revenue expenditure, I'm guessing, sir. Just a guess.
Okay. No, revenue or anybody would like to help him, help Ganesh? Anybody would like to help Ganesh?
Tirumalesh, Kapish,
Yeah.
anybody?
Anybody, Tirmalesh, Kapish is seeking your help.
Sir, second-hand furniture worth 9,000 is a capital expenditure, sir.
Okay, 9,000 is capital expenditure.
Capital expenditure, and repairing of the furniture is revenue expenditure.
Repairing is revenue expenditure. Yesterday we had a similar kind of scenario, right? Refurbishing. Okay, overhauling the machine is part of the machinery cost. Could you recollect?
Yeah, yes, sir. Overhauling, yeah. The first problem.
Is it not similar to this?
Yeah.
Okay. Okay, doesn't matter. Okay, next. Continue. Furniture, inflation, expenses.
So the furniture was installed by the own workman. Wages for being rupees 200 would be
Revenue expenditure. Wages would be revenue expenditure, sir.
Wages would be revenue expenditure. check. Yeah. The total cost of the furniture should be treated as 10,200. Why? 9,000 plus 1,000, 9,000 plus 1,000 plus 200. Because all these 9,000, we don't have any confusion, right? It is furniture, it is a long-term asset, use it for any purpose. There it is a fixed asset. There capital expenditure.
उनकी बेटी की
Sir, you're getting a problem in your audio, sir.
दीवार के सामने रहते हैं शादी बस की सास बोल के छोटी है बेटी बेटा डिग्री परसों परसों डिग्री खत्म हुई 1 साल हो रहा डिग्री खत्म हो के भी 1 साल भी ना डिग्री में से अभी खत्म भी नहीं हुई हाँ
Okay. Right. So now can you hear me?
Yes, sir.
Okay. Right. So 9,000, we don't have any confusion. Okay. Our confusion is only with
With expenses.
200.
Yeah, 1,200.
And 1,000. 1,000 also sorted out, but still there is some cloud over 200. Okay. So the 200 also is clear. Right. For the reason all the amounts mentioned should be capitalized, since without such expenditure, the furniture would not be available for use. Okay, if there are no laborers, it may be your own laborers, right? You will capitalize those 200. It means you will not again take it into wages. Let's say the wages for the laborers is 1,000, and you have to remove this 200 from the 1,000 and make that wages of 1,000 to 800 and bring this 200 and add it to this asset cost of the furniture. Are you getting me? Yes. So you have to add it here. You have to add it here.
Yes, sir.
Next. That's it. That's it. Next. Number 2. Who will take? Ganesh already attempted. Tirumlesh will take. Tirumlesh.
Yes, sir. Yes, sir. I'm reading the question.
Read, please.
Yeah. Yeah.
Yeah, find
Yeah.
revenue expenditure. Okay. And renewal fee of 2,000.
That's for license, right, sir?
Yeah.
License.
For license.
That will also come into capital in, sir.
Okay, let's check it. Number 2.
Or it's repeated every year, sir. So it might be revenue. Might, I don't know.
Yeah. Look at this. License for running the cinema house is capitalized. It's capital expenditure. No confusion there. But the fine is revenue expenditure because it is for that particular year only. Okay, it doesn't have long-term implication. And what about the renewal fee for next year? Renewal fee for next year. Okay, renewal fee. Okay, renewal fee is revenue expenditure. Renewal fee is revenue expenditure. But because it is for the next year, okay, it is a prepaid expense. When it is a prepaid expense, what is this? It is asset, current asset, not capital asset. It is not a long-term asset, but it is a
Short term current asset.
it's a current asset. Actually, if it is for this year, then it is revenue. You just take it in the debit side of the profit and loss account, that's it, over. But because it is specifically said it is for the next year, then you will take it as an asset, prepaid expense. All prepaid expenses, assets. All outstanding expenses, liabilities. All outstanding expenses added to that concerned expense. All prepaid expenses deducted from that concerned expense. Understand? Let's say salary outstanding. What do you do with salary outstanding? You will add it to the salary. Salary is 10,000. Outstanding salary is 2,000. So what do? You will add this 2,000 also to 2,000 also to 10,000, so that the salary, total salary becomes 12,000. And again, the same thing, you bring it and drop it in the liabilities, right? And again, you have to remember here one more thing, whether it is appearing in the adjustments or in the trial balance. If it is appearing in the trial balance, then you take only in one place. If it is appearing in the adjustments, then you have to give two effects. That also you have to bear it in mind. Okay. And similarly, the opposite treatment is given to the prepaid expenses. Because I got the opportunity to explain here, I'm just making use of this opportunity to again repeat what we have discussed about prepaid and outstanding. There's a lot of confusion that students commit. So therefore, again and again, I'm repeating whenever I get the opportunity, I'm repeating this prepaid and outstanding expenses. Okay, next. Who will take up the next one? Who will take up the next one? Fire insurance. Who will take up? Who will take up?
Sir,
You already took Tirumalesh.
No, Kaushik will give to Kaushik.
Yes, sir. Give to Kaushik, sir.
Kaushik?
sir, Naman is absent, sir.
Naman is absent, yeah. Naman is absent, yes. Kaushik? Roll number 9. Kaushik.
So Kaushik has a mic issue, sir. Chat box.
Okay. Okay, Ramu?
Sir,
Yeah, can you take up the next one? Third one.
second one, sir.
Third.
Third one. Fire insurance rupees 1,000 was paid on 1st October 2015 for 1 year.
Fire insurance 1,000 was paid.
Paid, sir, at 1st October.
For 1 year.
Insurance.
If it is paid in the beginning, then it is the expense for that year. But I think this will spread to the next year also.
Yes, it's like
So what is spreading to the next year? Half of the insurance, yes, correct. Half of the
insurance premium pertain to the year beginning on 1st April 2016. Hence, such amount should be treated as prepaid expenses. This remaining amount is renewal expenses from the current year.
Dots level అట్లా అది జీటీ ఎక్స్ప్రెస్ అది శాతవాహన ఎక్స్ప్రెస్ లాగా అట్లా వెళ్ళిపోతుంది.
సారీ సార్.
Half of the insurance అలాంటి స్లో లెర్నర్స్ ఆల్సో విల్ బి దేర్ నా
సార్.
నేను అసలే స్లో. Half of the insurance premium pertains to the year beginning on 1st April 2016, and such amount should be treated as prepaid expenses. The remaining amount is revenue expense
in current year.
Yes. Good attempt. Next, who will take the next? Maheshwar will take. V. Maheshwar will take up the next one and last one.
It's capital, sir. 1,200.
1000 is
Yes, sir.
temporary huts constructed, capital expenditure, and they were necessary for the construction of the cinema. And the simple Mysore. Very good. And they were demolished when the cinema is ready. Okay. Yes. It is. It is capital expenditure. It should be added to the cost of the cinema. Okay. Okay. It is added to the cost of the cinema. Okay. Okay. All right. Okay. Right. So we will close it here for today. Right? I think you got substantial grip on, because our problems go wrong in preparation of profit and loss account and balance sheet. Okay? Our problems go wrong in preparation of balance sheet and profit and loss account with the confusion in this. So therefore, I made you to have an exercise in this. Okay? So, yeah. And, remember, there will be less of scolding or shouting, when you're misbehaving, right? But action will be tough. There is one student just now